So if you want to invest in CITRIX products, you've got to have at least 3 of one of these. $300 a month is the minimum, and you can go in and buy a CITRIX product, whether it be the CITRIX 40, whether it be the CITRIX Divi, or any one of the other myriad of products that they've got. Many people that are put off by the cost and the complication of investing. This is Tonight. I'm Bruce Whitfield. Tonight we look at why this is changing. Joining me from our Cape Town studios is the Chief Executive of Global Trader 247, GT247, Charles Savage, and Financial Advisor at Consolidated Financial Planning, Lindeque. Charles Savage, you're going to tell me I don't need 3 of these 100 Rand notes, which you can hear rustling in my grubby paws. I only need 1 of them. How does $100 get me started in the world of investing, which is prohibitive, complicated, expensive, and exclusive?
It was all of those things up until about Monday. So Bruce, with 100 Rand, we've recently launched a platform called Easy Equities, where we've essentially tried to address all of the barriers to entry that have been prevalent with regards to direct share ownership in South Africa. And so an investor with as little as 100 Rand can go and build out a portfolio of stocks, and if he wants, he can go buy 1 Rand of 100 stocks or 20 Rand of 5 stocks, and really makes the entire JSE universe accessible to him, who wouldn't want to own a piece of Naspers or a piece of Sasol. And given those share prices, with $100 you wouldn't previously be able to buy those shares.
I mean, at $100 a month, it's going to take me 14 months to own 1 Naspers share. That doesn't sound like investing. That sounds like a labor of love.
That assumes Naspers is not going to go up any further.
Of course.
So you better start catching up with it now.
But give me a sense, please, as to the technicalities behind it. Because, I mean, if I want to own 1/14 of Naspers this month and I give you my first $100 and I put it down on the table, what do I physically get in return for my $100?
Right, what you get is a fractional share. That fractional share is an over-the-counter derivative. And you get all of the share benefits, all of the economic benefits of that share ownership. The only exclusion is you don't get any voting rights until such time as you own a full portion or a whole share. At the point that you own a whole share, the over-the-counter derivative converts into an equity or a share, and you become the beneficial direct share owner of that share.
Now, one of the great criticisms of investing, Charles Savage, is that it's massively complicated. This doesn't simplify things. Suddenly I own an over-the-counter derivative which converts to a share at some point in the future. Is this really for Joe Soap?
Yes, 100%. I mean, we've got 1,000 people playing our game at the moment. And the overwhelming response is that this is easy. The thing that you're alluding to, I think, more is that choosing the right shares isn't easy. And so that's a part of our platform that we still need to address. Right now what we're testing is direct share purchasing, have we made that easy? And when we launched last Monday, we sort of felt that we'd got 90% there. And what the users are telling us through playing our challenge is that we're about 90% there, but that last 10%, there's some really good feedback coming from our users, and that engagement is going to get even easier. The next part of our program is to make choosing shares even easier. And we've got some really innovative ideas about how we could facilitate that. And essentially this platform isn't about challenging the current stockbroking models. It's actually about challenging the asset management industry. Okay,
well, let's talk Lindeque. Is this the revolution we've been waiting for?
Quite possibly, depending on which side of the spectrum you fall on. You get a lot of, as you say, Joe Soaps who want to own a share. They like the idea of holding that share and being invested in that specific company. I mean, on my side, look at my wife. She shops at Woolworths. Holding a share in Woolworths might make me feel a little bit better, because I know that
the amount of money that she spends.
Every time she spends and she swipes my credit card and I get that SMS, I know that somehow I'm getting 0.00 something back. The big issue is, as what Charles might have alluded to, is how do you pick those shares? There are the usual suspects.
Before we get on to picking, because I want to talk to Charles about how they're going to make it easy to pick shares, because there is no such thing in the world as easy. Charles might shout at me. Sure. But get down to the practicality, the reality of the real value I get putting $100 a month into the market. CITRIX made it affordable with $300 a month. This is challenging CITRIX. It's challenging unit trusts, the asset management industry, as Charles Savage says it does. But is there really a long-term benefit for me putting $100 into the market in 14 months' time at today's Naspers share price, getting a Naspers share? Whoop-de-doo, I now own a share in Naspers. It just doesn't strike me as being something that will engage me strongly enough.
I think what you have to look at is, what do you get for that 100 Rand? Owning a percentage of a share. Now, before you just heard about what's happening out in the stock exchange, you would kind of see what's going on in the news. You'd see red and you would see green, and that was it. You might meet with your financial advisor, you might speak to some of your friends over the braai, and you might hear about what's happening out there. But you really don't take a vested interest in what is actually happening. Now, imagine if you owned 1% of African Bank share. You want to know exactly what's going on in the background.
Is this about hooking us into the habit of investing? Is that what it is? I mean, because you see people on a daily basis who come to you, they're 55, they've got big eyes, they might have a company pension scheme if they're lucky, there's 500,000 Rand in the pension pot and they don't know how they're going to live beyond 60. Is this a way of breaking that cycle of ignorance about the market, perhaps?
I think it stops a lot of the ignorance that goes on with what's out there, and also it gets people used to saving. A big issue in South Africa is our savings. We don't save too well, and when we start saving, it's often too late. We don't have the necessary capabilities, or we haven't put the processes and steps in place early on. Now, if you get somebody who's 23 years old, 24 years old, they've just finished their honours, okay? Or you get somebody who now can't study full-time, they start their first job at the age of 18 or 19. If they can spare 100 Rand and they start saving now, the compounding effects and the educational effects are...
Am I not better off saving for 3 months, putting this into the least cost savings account that I can possibly find, and then taking my 300 Rand once a quarter and putting it into CITRIX?
CITRIX is a little bit different. It's an exchange-traded fund. It's an ETF.
Exactly, but I get diversity, and I get something that is a broader market exposure rather than this complexity of picking a share.
Well, the thing is, with that broad spectrum of shares, they've been chosen for you. The top 40, it's already reweighted every so often. You don't get to really choose the shares that you want. From this route, if I can call it that, you have the ability to say, you know what, I want to buy Advotech. Why? Because I believe in the long-term private education scenario.
Let's go to Charles Savage then. Okay, Charles, I mean, why do I not just save my 100 Rand a month for a quarter and put it into CITRIX? How are you going to make it possible for me to get an ownership benefit and also to buy the right share so that I don't get disheartened 6 months in when I see the value of my half share falling?
I think you guys have both hit the nail on the head. I mean, it's about saving and it's about education. So how do we facilitate those two things? Now, I mean, Warren Buffett said that the biggest investment mistake he ever made was not starting soon enough, and he started share investing at 12. So there's something there that we need to embrace, and we need to start dealing with share investment education at a very early stage.
I mean, is
the plan,
sorry, Charles. Is the plan here that you are capturing the GT247 customer of the future, or is there really a business model in here that will benefit both the 100 Rand a month investor and yourselves ultimately?
This is about building a sustainable retail direct share ownership in South Africa. I've been in the industry for 14 years, and for 14 years now, there's been this promise of strong growth in retail direct shareholders on the JSE, and it's never happened. And it hasn't not happened because of a lack of trying. I mean, the banks, the brokerages, the JSE themselves, our own businesses have tried to drive this revolution. And when I reflect on the strategies that we deployed, they essentially come down to two things. We focused on costs, and that's been good for the industry. I mean, I remember when I got into the industry, the average retailer was paying about 2% to buy and sell shares. Today, you can do it for 1/10 of that. And the other area of focus was on platforms, so online platforms. Now, in our own business over the last 14 years, we spent over 200 million Rand on trading platforms. The level of sophistication that's brought to the market has been extraordinary. And yet this retail ownership hasn't happened. This promise of growth has never happened. So when I reflected on that, I said, well, what do we get wrong? Because all of us have done it, just with different size budgets. And I think what we got wrong is we didn't make it easy. And when I talk about easy, I'm not talking about just the share purchase process or the platform. Every aspect of investing really just needs to be simplified. I mean, as stockbrokers, I think we can take a lot of responsibility for using jargon and language that really protects us because it makes us look smart, and allows us to sell services to clients that they could really do for themselves. And so in this, with Easy Equities, what I'm really trying to do is take equity investing back to a basic level, try and drive that retail revolution that gets 50% of South Africans taxpayers, so 3.5 million people, having direct equity ownership. And if we do that, everyone who participates will share in the economic benefits. Because share ownership is good, it builds long-term wealth, and we need to get South Africans started really early.
I buy the story completely, Charles Savage, but is there just too much fresh air in Cape Town for Charles Savage? It's noble and it's good, and he's doing a wonderful thing. He's not going to get 3.5 million South Africans investing like this, though, is he?
I think that's the challenge. If you can get a tenth of that, that's a tenth more South Africans that are saving.
If you get 1,000 people doing it, it's 1,000 more people involved in the market, which is good.
But what it does do is it starts raising the questions of how do I create wealth? And that's what needs to be done specifically in South Africa. Everybody thinks that the age-old saying, you need money to make money. But everybody thinks you need a lot of money to make a lot of money. And if you can start with something as small as 100 Rand, and I do put it out there, speak to your financial advisor if you have one. Look at how does this form part of your financial planning? Because it's easy to say, buy a share in a company, but would you rather put that 100 Rand away towards paying off debt? Is there schooling that's going on that you need to pay for your kids? How does it form part of the whole plan? So it's great, as you said, it is noble. It's fantastic at getting people with just 100 Rand to start investing, but to a lot of South Africans, just 100 Rand is not just 100 Rand.
Absolutely. Is this the beginning of a revolution?
I believe so.
There we go. At that point, we will leave it. The Chief Executive of GT247, Charles Savage, and Andre Lindeque from Consolidated Financial Planning. Thank you both for your time this evening. And Charles Savage, I wish you the very best of luck. I hope lots of people take a 100 Rand note. Next month, add another 100, and another month after that, add another 100 to get into the habit not only of saving and investing, but also learning what can be the magic of the market, something that Warren Buffett, tragically, to his own detriment, only learned when he turned 12. Thank you for watching. There'll be more tonight, tomorrow. Until then, bye-bye.